When I first delved into the world of securities, I was struck by the realization that all stocks are not, contrary to popular belief, born equal. Nope, I'm not talking about the difference in share prices between Apple and that hot dog stand down the street. I'm talking about the less understood cousins of common stocks, the preferred stocks. And with a name like that, they do sound quite fancy, don't they? It's almost like they're the caviar of stocks. But what's even more intriguing is that heavy-hitting institutions, funds, and the big fish in investing, I'm looking at you, Warren Buffett, have a sweet spot for these preferred stocks. But why? Why do they prefer, preferred stock? How about we break this down into bite-sized pieces? When you buy a common stock, you're essentially buying a teeny-weeny slice of the company's pie. It gives you voting rights, bragging rights, and maybe even a slice of the profits if the company feels generous enough to distribute dividends. But here's the kicker. If the company goes belly up, common stockholders are the last in line to get any leftover crumbs, after creditors, bondholders, and, you guessed it, preferred stockholders. So, what makes preferred stocks the VIPs of this financial party? Preferred stocks are sort of the love child between a stock and a bond. You get ownership in a company, just like common stock, but with some extra privileges. Preferred stockholders are the cool kids at the dividend lunch line. They get served first, hence the prefix preferred. And if the company goes under, aka liquidated, they're closer to the front of the assets buffet, pun intended line 2. The perks of preferred stocks are pretty clear. Firstly, they often dish out higher dividends than common stocks. Who'd say no to more money? Plus, they're generally as volatile as a well-trained soldier, giving you more predictable returns. Now, don't get me wrong, preferred stocks aren't all rainbows and unicorns. Since dividends are fixed, preferred stocks won't take you on the thrilling growth ride that common stocks might. Also, there's always the risk of a company turning into a party pooper by calling their preferred stocks. That's finance speak for buying back shares at a price they set, something companies can usually only do for preferred stocks. But for the big shots in the investing world, the promise of steady income and better dibs on assets often make these risks look like small potatoes. Warren Buffett, for instance, uses preferred stocks like a cozy, reliable hammock, generating income and protecting his investments. So, while preferred stocks may not be everyone's cup of tea or glass of champagne, they do hold a special place in the portfolios of many seasoned investors.